So this is one of my funded accounts here that I had for a little over 10 months. You can see we started this account around April 2024 and we ended it around February 2025. And you can see here off of the 10 months, we've been able to withdraw over $42,000 just off of one account. And in this video, I'm going to show you guys exactly how I was able to do it and how I'm able to consistently profit every single month utilizing prop firms, and how I'm able to stack these accounts to make a full-time living, making anywhere from $10,000 to $20,000 per month. Guys, the 5 steps when it comes to utilizing proper risk management, psychology, and everything that you need to make a full-time living as a day trader. How I break it down is very simple to where you never have to continuously blow funded accounts. Instead, you can keep one account or maybe stack those accounts and grow them over time. So if you guys want to get the most value from this video, I urge you guys to watch till the end of this video and take notes. This is one of the most important videos that you'll probably ever watch on YouTube. The first key things I see that stops a lot of traders is trading lower leverage accounts. And what I mean by lower leverage accounts is accounts like 50Ks, 25Ks, or even 10Ks. Accounts are great when it comes to having an opportunity to buy a funded account with the overall leverage of 50K for only $100 or maybe $200. The problem is psychologically, this could affect you in a way that causes you to consistently blow these accounts. And let me break that down. Say you had a losing day for about $800, right? It happens, right? You're risking $400 per trade, both trades lost, or maybe you took 3 trades and you were down $800 on the day. On a 50K account, specifically for futures, the max drawdown is 3%, which is around negative $2,000. So if you lose $800 off of that max drawdown of $2,000, though yes, it's only $800 out of the $2,000, and you may be looking at this like, you know, I still have another $1,200 to risk. Reason why this is not good is because of overall psychology, because you have to take into account what is $800 to $2,000. $100 to $2,000 is 40% of your total account. So if you have a specific day to where you pretty much lose almost half of your account, right, this can affect you psychologically. Have you been in a position to where you've had a bigger loss than you anticipated on the day, and then you're like, man, this is half of my account? Like, most likely psychologically this is going to affect you, because the voice in the back of your head is going to tell you, man, this is, you know, almost half of the account, almost half of the account. You have to take another trade. When you lose a specific amount that is half or at least half of your total drawdown, this affects you psychologically to where you can be in a position to where you may make a mistake. And then you get into this mindset of YOLO, right? You know, I'm already down half the account. Let me just YOLO this, and then you end up blowing your account. Right? This is a situation a lot of traders find themselves in, and it's because of this specific thing. Even though trading a 50K can be cost effective, the overall leverage that you have with these accounts do not take into account positions to where you may go through a losing streak, positions to where you may have a bigger loss than anticipated. And when you're in a situation to where you're on a losing streak or you have a bigger loss, this now affects your overall psychology to put you in a position to where you may harm yourself. So this is why specifically whenever I'm trading funded accounts, I trade anywhere from 100K to $150,000. And even though this is a little bit more expensive, this allows you to have long-term growth, because the overall max loss on these accounts is anywhere from negative $4,000 to negative $6,000. Imagine you're in a position to where you lose $800 on the 50K account. That's $2,000 as your max drawdown. That's going to affect you psychologically to where you may take another position or potentially blow your account that day to try and make that money back. But if you're on 100K or 150K, you losing that $800 on the day, you understand that you still have room to risk. You still have overall leverage. So if I lose $800 on the day on a $4,000 account, it's only 25% on the account for that day, which is pretty all right. On a 150K account, that's only like 15 to 20% of the max account. That's why the prop firms will promote these 50Ks, right? They'll have discounts, or, you know, every single week Apex has, get 20 50K accounts for like $17. And the reason why they're promoting these 50Ks heavily, these prop firms understand that the 50K is their most profitable asset. Every trader will see a 50K as, okay, that's cheap, that's affordable, but they don't understand that the psychological factor that happens when you have a drawdown that's only 2,000, but you have the leverage of 50,000, you put yourself in a position to where if you lose a bigger amount than you anticipate, then that's going to put you on a psychological whirlwind to where you'll eventually blow that account consistently over time. This is why you see a lot of traders, they'll 150K accounts blown before they get their first payout. How to avoid this psychological whirlwind is by obviously utilizing a higher account size, just in case positions to where you may go through a losing streak or have a bigger loss than anticipated, you are not under that psychological distress. For number 2 here is understanding your max losing streak. So going through your overall trading journal, number 2 and number 3 actually go hand in hand. Starting off with number 2 is by understanding your max losing streak. So you want to go into your journal here, or your overall trade metric, and go over a situation to where you may have had a losing streak. You can see here I had a losing streak around this level, which looks to be around that late June, early July part, where you can see we had that overall dip, as well as right here during June. So obviously this is because of the summer markets. So obviously, most likely during this time, it was probably a lot tougher to trade. This is a situation to where I had a losing streak. Looking at that metric, I understand I'm going through a losing streak. I understand that I can maximum lose 3 days in a row. And most likely I'm taking 1 to 2 trades a day. Bro, that's my max losing streak. I don't think I've ever went past that. And most of the time, I'm not even taking 2 trades in a row. So my max losing streak is 5 trades in a row to where I lose. It's very important to understand your maximum losing streak. And this gets us into the third lesson. Third lesson is by prioritizing the downside. So if I'm trading a 150K account, my max loss is about $6,000, right? And for a lot of prop firms, it's anywhere from $6,000 to $4,500, right? That's usually the max loss. I'm risking anywhere from $500 to $600 per trade. And obviously with my max losing streak of 5, let's just say worst case scenario, all trades hit 600. And I understand that my max losing streak is overall $3,000, which is a lot better than what most traders can obviously say. With a $6,000 max loss limit and me risking anywhere from $500 to $600 per trade permits me the opportunity that if I were to lose the account, I would have to lose anywhere from 10, 12 trades in a row. And let's be honest here, if I lose 10 to 12 trades in a row, I probably need to take a break from trading. I probably need to hang up trading and, go find something else to do, because 10 to 12 trades in a row must mean that the market is broken or something. But yeah, it just goes to show that the overall risk management of trading is actually a lot simpler than you think. Because if you understand that your max loss is 5 trades in a row, and for you to lose your account, you'd have to lose 10 to 12 trades in a row. As long as you stay within your risk parameter, you will grow your account, just like I showed you right here, right? Overall grow your account. The reason why you're consistently blowing these accounts, or you're not in a position to where you're growing an account long term, because you put yourself in a position to where you deviate from your overall risk parameter, right? You put yourself in positions to where you're over leveraging. You were supposed to risk $500 on that trade. Now you're risking $1,000 on that trade. You put yourself in a position to where you take 3 trades that day, right? So now you have a $600 loss, $600 loss, plus another $600 loss. So the reason why you're consistently blowing these accounts, because you're trading based upon an emotional reaction rather than following a specific system that's supposed to keep your account long term. This is the hardest part about trading, is the overall psychology. And this is what no one's going to talk about. Not necessarily about strategy, right? It's easy to understand strategy. What's really tough to master is the overall psychology plus the risk management behind it and following that specific system. And this is one of the most important things that we try to teach our students over here at Spark. If you guys don't know, Spark is the coaching platform with me and my brother where we help beginner or struggling traders become profitable utilizing the same system. The reason why this is great is because this allows you a buffer. So if you're in a situation to where you lose 5 trades in a row, you're not under psychological distress, where you're in a situation to where you're fearful whether you'll keep that account or not, because you understand that for me to lose the account, I'd have to lose anywhere from 10, 12 trades in a row. So when you have a situation to where you have a losing trade or you have a losing day, you're not in a position to where you want to make that money back that same day, and you're simply just not following your plan, right? You're sticking to the overall system that you built, you're sticking to the risk parameters that you have in place, and you're following the rules on a consistent day-by-day basis. And as long as you stick to this overall risk analysis, over a period of time, you'll have losing streaks. You'll have situations to where you have great days and then losing days. You'll have all of those things. But the thing is, as long as you can just consistently show up and follow the same system on a day-by-day basis, you will consistently make money over time. Obviously, it's not quick, right? We all see the the bows and everything like that. And everyone wants to show you that they can make 10% in a month, right? But in reality, if you guys practical advice to where you can make a consistent living trading, a lot of it is slow and boring. It's basically coming to markets on a consistent day-by-day basis, following the same system day in and day out, and allowing time to do its work, and basically not looking at the account until it's the end of the month when you're ready to withdraw. So allowing you 10 to 12 trades before you blow an account gives you a very great buffer to where you don't be in a position to where you're emotionally distressed. So you go from following your system to now you're over trading or potentially blowing your account. Next, we're going to be talking about max daily loss mitigation, which basically means that if I have a $6,000 account, more than half of that account would be my max daily loss on the day, which for me would be anywhere from $3,700 to $4,000. So this would be a max daily loss that you've lost more than half of the account, and you should slow down. Whenever you're in a situation to where you hit a max daily loss, you want to overall reduce your risk. Say I was risking the $500 to $600 per trade. Like once I hit this max daily loss, let's say I go through a losing streak, or I have a day where I'm under a psychological event, or maybe I overtrade or over leverage and some situation put me in this situation. So whenever you're in this situation, you want to lower your risk by anywhere from 30 to 40%. I'm averaging $600 per trade. I want to lower my risk to now risking $400 per trade. Risking previously $500 per trade, want to now risk $300 per trade, basically cutting the previous risk that you would have taken on a trade by $200, from $600 to $400 and $500 to $300. And you basically want to risk this new amount till I get back into half. So half of this $4,000 is now $2,000. So let's break this down. So let's say you start at zero, and since you started the account, you have not made any money. You had a bad day and you're down $4,000. Every single trade, you're risking $600 on that trade. Down $4,000, you're at your max daily loss mitigation. It's basically more than half of your total risk that you have on the account. Now you have to reduce your risk by $200. So you go from risking $600 per trade to now risking $400 per trade till you get back to $2,000. So now that you've been, utilizing proper risk management, you've been keeping your risk very tight, and you're back at negative $2,000, you can then now go back up to risking $600 per trade to get yourself out of that hole, to get back to zero. This does two things, right? Since you're reducing your risk, this is kind of a punishment for you, because obviously you hit your max daily loss. Taking a hit now of your dopamine from risking $600 to now risking $400. Instead of making anywhere from $1,200 to, let's say, $1,500 per trade, you're now making anywhere from $800 to $1,200 per trade. It's definitely puts you in a position to where you're no longer getting that dopamine spike every single time you hit that big win. Not only is this a punishment for you to where you don't have that dopamine spike anymore, this also gives you the opportunity to where you don't blow your account. So if you're risking $600 per trade, obviously it would take 10 trades to lose the full account. Since you hit that daily loss, cut your risk by 400. Let's say you keep losing. Instead of losing 10 times in a row to lose the account, you now have to lose 15 times in a row to lose the account. It serves as a punishment, lower your risk, and be a lot more conservative, as well as it saves you in the long term, because now you added an additional 5 trades as a buffer before you lose the overall count. And last but not least, having a dynamic risk to reward. So when it comes to my overall trading, I like to keep it pretty simple. So let's say we have a level of support right here. Price comes down into that level of support, and then we see a bounce. And let's say off of this breaker structure, I enter along right here. When I enter my first position, I use less risk but a bigger stop size. So I use less risk but a bigger stop size just in case. Obviously, as price finds support and pushes higher, I scale into my position and I trail my stop loss. So if my stop loss was back down here, if I scale in right here, I trail my stop loss from right here to now back at this low. This is then creating a dynamic risk to reward system that keeps my losses small while maximizing my overall reward. Because since I scale into this trade idea, as price goes into my take profit, I end up making $200 to $300 more on this setup. Since I trail my stop loss from this low, now up here, I end up risking either the exact same amount, sometimes $100 to $200 more. Dynamic risk to reward system, my loss is small while obviously maximizing on my overall winners. The reason why this works very well is because it takes into account probability. So let's say obviously the setup here, this comes lower, find support to push higher. Let's say I take that first trade and it doesn't pan out, right? It just goes lower and it fails, right? That's the probabilities of the markets, right? You know, you could see a great setup and it just cannot pan out. So since I entered that first position with the low risk, price comes all the way down here, I end up losing a small amount. Why I end up losing a small amount is because I never scaled in. If I entered this first trade with only 5 contracts, price stops me out here for 10 points and $250 on this trade, just keeping my loss very small. Yet if the opposite happened, where price obviously found support and pushed higher and I scaled in, go from 5 contracts to now 10 contracts. I trail my stop loss here from 10 points to now 6 points. So I go from risking $250 per trade to now where I'm only risking $300. Yet if price comes all the way back up here for anything to 15 to 20 points, since I scaled in, I end up making anywhere from $750 to $1,000. And this is what it means to have a dynamic risk to reward. You don't want to have a risk to reward system to where it's linear, to where every single trade you're taking, you know, 2 to 1 R or 3 to 1 R every single trade, because every market condition is different. Some conditions I may take that 2 to 1 R. Some conditions I may end up scaling in for a 4 to 1 or sometimes a 5 to 1 R. So every market condition is different, and having that dynamic risk to reward where you're able to maximize on your overall winners, keep those losses small, is a very good cheat code where you can overall grow your account time and time again. And if you implement everything that I taught you when it comes to trading larger accounts with larger leverage, understanding your max losing streak, and then prioritizing the downsides with that, and then obviously understanding your max day loss mitigation, utilizing a dynamic risk reward, you will be in a position just like this to where you're consistently profiting month after month after month, year after year after year as a full-time trader. And obviously this is just on one account. Imagine this stacked on top of 5 accounts. You can easily start making anywhere from 10 to 20 to even $30,000 a month trading, making anywhere from $150,000 a year to $300,000 a year as a full-time trader. Obviously this is not easy, it is not simple. It obviously took me years to understand this risk management structure and build it, but since I've built it, it's definitely been helpful. And this is what I teach my students inside of Spark on a consistent day-by-day basis. And this is why we're able to see our students flourish and see the most success, because we give no BS advice, easy to understand, that's actually logical for long-term success. And if you guys don't know what Spark is, it's the coaching platform between me and my brother Spec Trades, where we help beginner or struggling traders learn how to trade, and obviously utilizing the specific system, strategy, risk management, psychology, everything that you would need to take you from where you're at to a much more confident, consistently profitable trader in the next 90 days or sometimes 6 to 12 months. So if you guys want to join Spark and be a part of our coaching program, learn the exact same blueprint that we trade on a consistent day-by-day basis that makes us full-time traders, and hopefully you can learn this exact same blueprint, the exact system that we teach you, show up, trade live with us every single morning, as well as be mentored by us, then you can obviously click the first link in the description and join Spark. That'll be it for the video. I hope you guys got a lot of value from this video. Make sure you guys click that like button, subscribe if you're new to my channel. I'm your mentor, Arkhamtrades. Be safe.